Hello and welcome. My name is Thorsten Tiet. I'm the founder of Dividend Stocks Cash, a highly successful screener for dividend investors or for long-term investors in general. We already enjoy more than 40,000 members, and we have a high audience in Central Europe, especially in German-speaking countries, but we cover stocks all around the world. Also focus on the United States and on the Asian stock market, for example. So our objective is to help you find promising stocks and especially dividend stocks. We think that without knowing your investment strategy, what you're interested in are sure dividends, which means worst case for you might be a dividend cut. And you also might be interested in either high dividends right from the start or in dynamic dividend growth, depending if you're a dividend income investor or a dividend growth investor. So we will show you how you find the best dividend stocks or promising dividend stocks for your portfolio, sure dividends included. What's the problem right now with many approaches for investors? I think it's the dividend focus, because even if you're a dividend investor, then you shouldn't solely rely on dividend related metrics. What does it mean? I will show you right now. You probably know the dividend aristocrats, these concepts, and it's a concept which is very popular because dividend aristocrats are representative for standing for sure dividends, but basically it's an all or nothing concept, because we have on the one hand reliable dividend payers which are not yet aristocrats. So if you purely rely on years of dividend increase or dividend aristocrats particularly, then you don't catch these. And on the other hand, it doesn't mean that dividend aristocrats are reliable dividend payers or are still reliable dividend payers. Maybe management decided to increase dividends once more, but they have operational problems. Their earnings growth is sluggish, or earnings are even decreasing, but they still struggle to increase their dividends one or two more times before the dividend cut is coming. So dividend aristocrat doesn't mean that the company is not already in trouble. And we can show you all this, or I show all this to you. First, showing you some reliable dividend payers not being dividend aristocrats. So I need to log in first. The first stock to show you is Amgen, just as an example. So Amgen just started paying dividends in 2011, and now they increase dividends steadily from the start, a little bit more dynamically than afterwards, because they started from scratch. But I think we can classify Amgen as a solid dividend payer. But if you just invest in dividend aristocrats, you will have to wait for another 17 years until 25 years are reached. And then we have other stocks paying dividends for a longer time already, like BlackRock, which I would also classify as a solid dividend payer. You can just see it here in the chart, showing you the dividends and the earnings per share right now. Disney is another example, and another drastic example, maybe because they just cut their dividends about in half because of the effects of the corona crisis and the shutdown of their parks. But we can classify Walt Disney still as a reliable dividend payer. This is an extreme example. Management decided to cut dividends in half because they don't know exactly what will happen. But I think overall Walt Disney is still a reliable dividend payer, and once the Corona crisis will be is finished, then they should come back and their dividends will even exceed the dividends before the dividend cut. So if you just invest in dividend aristocrats, or if you just invest in our payers, in, for example, in dividend contenders, dividend challengers, if you just look at the years of dividend increase, then you will have to wait for some years until you are allowed to invest in Disney. And I think that it's not a concept which is very practical. On the other hand, I wanted to show you that we have dividend aristocrats. I wouldn't classify necessarily as promising investments. Take natural fuel gas, for example. We have a dividend aristocrat here, but a very sluggish dividend increase, and I don't know if you can really classify these dividends to be safe, because you see that sometimes they post losses and sometimes dividends are not covered. They still post earnings or profits, but dividends are not covered, at least not by the earnings per share, and very often also not by the free cash flow. And you can also see, by the way, that as a long-term investment here, you can't expect capital gains with such an investment, and your yield is always the sum of the dividend yield plus capital gains. And I will show you another stock. For example, take this one, Mercury General. Don't know if it's a good investment. It's a dividend aristocrat, but you can basically see, I changed the layout and you can even see it better. We had dynamic dividend growth back till the financial crisis. Then the company posted losses, but management still decided to pay even increased dividends. And since then, the dividend growth is extremely sluggish, and very often the payout ratio exceeds 100%. So if you just rely on metrics like dividend aristocrats, you simply don't catch these facts. Even if you extend the matrix and you include a payout ratio, for example, like this one, it's not enough, because the payout ratio just catches the current status quo, so the current growth. So this company, for example, has payout ratio of 73%, and the year before it was 43%, and the year before it exceeded 100%. And you see, it's just not reliable, the payout ratio, because the earnings are not reliable. And you don't catch that if you just look at the current payout ratio. So our solution is to find better metrics to give you a better idea about the reliability of a dividend stock. And let's go back to a drastic example. Let's go back to Walt Disney, for example. So you see that here we have 0 years of dividend increase. We have 0 years of dividend paying without a decrease. So we just had this dividend cut. And still, if I show you the matrix we developed, you can still see that Walt Disney is a reliable dividend payer overall, although there was a dividend cut, thanks to this matrix called dividend stability. So dividend stability is a metric ranging from -0 for very bad stability, which means that there is no increase but a decrease over time, and the +1 is the best you can have, which means that over the years there is a stable increase. And Walt Disney, before the dividend cut, they had a higher dividend stability, 0.9 something. Now they still have 0.87, which is rather close to 1. It means it's still a good dividend payer. And I can show you what that means on the chart. And you see here that we have dividends dividend increase in the course of time, except in 1999 we had a dividend cut, and now we have one more dividend cut. But the dividend cut in 1999 was followed by a dividend increase, a really high dividend increase, and we hope that this will be the case once more here in the near future. Okay, and then we have these growth rates giving you an idea about the overall growth of the dividends. It's a compound annual growth rate, which is of course not included in the concept of dividend aristocrats. The compound annual growth rate is a very well known metric. I think we show this to you for the past and also for the running or the current business year. You see minus 50%. This is the current dividend cut. But overall, with the stability matrix, you have a nice idea about the stability or about the reliability of the company as a dividend payer. And if I go back, for example, to BlackRock, then you see that we have an extremely high dividend stability, really close to 1. And this is A++. And here you can see what it means in the chart. And this is really nice because we have this combination, this unique combination between the matrix and the right matrix. You already noticed probably that we also show you if the company is a dividend aristocrat, but it is just an additional metric. It's not a core metric for us. Core metrics are the stability matrix, and then we match these, or we add the charts to these matrix, so you can have a very clear vision what these metrics mean in real life over the long run. We also have these stability metrics not only for dividends, because remember I said that the problem is the dividend focus, and this is or we help to overcome this by giving you metrics regarding the earnings, regarding the cash flows, even regarding the revenues. And if you have a company like that and you see that we have a very stable earnings growth, 0.91, basically the same as the dividend stability, and then it should be clear that BlackRock in this case is a very solid and reliable dividend payer because their earnings are very reliable. We have the compound annual growth rates for the earnings as well. So you get an idea also if the growth of dividends matches the growth of the earnings. And the same once again for the cash flow, which is not always to use. For example, for banks, you can't use the cash flow, but for BlackRock, you see that the cash flow is also in general nicely growing, except here for the last years. And then we also have the free cash flow. In this case, dividends are nicely covered by earnings, and dividends are also covered by the cash flow. What it is here about, why the cash flow was rather low regarding the earnings. This is something we should discover if we would dive more into detail right now, but it's still a very solid dividend payer and a solid overall company. By the way, we also offer the payout based on the free cash flow, not only on the earnings. So you get an overall very nice idea of the stock, and you can judge if the company is a reliable dividend payer much better this way. We also offer you filters, and on the filter you can also apply the filter for the classics, so what you are maybe used to, like years of dividend increase. So you could filter for dividend aristocrats if you want, but you can also filter for reliable dividend payers regarding the dividend stability, then regarding these growth metrics, or also regarding your dividend yield, the required dividend yield, and the payout ratios. So all the metrics you might already be used to. We also have the rankings helping you to find promising stocks for your investment, while the filter is going to limit the list. The ranking is going to give you an exact idea about the remaining stocks, how well they are suited for an investment, depending on your investment strategy. So we have some public filters, two public filters regarding dividend growth and dividend income, but you can create your own filter. For example, if you're a dividend growth investor, stocks paying high dividends are more interesting for you than stocks with dynamic dividend growth but low dividend yield. So just look at 3M, for example, paying rather high dividends. And now I have my ranking doesn't regarding dividend payments at all, but if we select the dividend income ranking, then most probably the ranking of 3M goes up. Just let's change it, and you see now that 3M's ranking is close to 100, which is the maximum value here. And you can even select the stock, and now you get an idea about the ranking. We have here different criteria which were part of the ranking, and you can see which criteria is fully matched and which isn't exactly. So we have a sluggish revenue growth of the last 5 years, for example. So this criteria is not completely matched, or not matched nearly at all, but overall 3M still scores with 94%. If we, on the other hand, make a dividend growth or choose the dividend growth ranking, then we have different criteria here applied, and then you see that 3M still not really bad, but lost some points regarding for dividend growth investors. So we have here some criteria which is not completely matched. And this helps you to find promising stocks, we think, and it also helps you not to rely on, in our point of view, outdated or incomplete metrics or concepts like the concept of dividend aristocrats. So my proposition is just give it a try. You can just visit the website and already play around with the website as a guest. You can also enjoy our lists, which are mostly completely for free. We even have a list of dividend aristocrats because it's just interesting for many people. We have here more than 100 dividend aristocrats, mostly from the United States, but also from other countries in the world. We also have something which is very nice called the Dividend Turbo. And here you see, for example, let's go back to 3M, the dividend yield starting here in 2000, and you see add-ons if the dividend yield is high regarding the history of the company, or rather low. In the case of 3M, it's rather high, and here you see even the dividend payments. So you see it's a reliable dividend payer. And we also have the estimates included. So just check out the website. It's one of the most successful websites here in Germany. We have a German version. This is the English version, which should be more interesting to you. So thanks for watching, and I hope you enjoyed the video. Wish you nice investments. Bye.